In recent years, a digital revolution has been taking place in the world of finance. Bitcoin, a decentralized digital currency, has emerged as a popular alternative to traditional forms of money. One of the key arguments in favor of Bitcoin is its potential to replace gold as a store of value. In this video, we will explore the reasons why Bitcoin is being considered as a replacement for gold and analyze the implications of this shift in the financial landscape. But before we begin, please like and subscribe to our YouTube channel for such amazing and informative videos. The rise of Bitcoin. Bitcoin, introduced in 2009 by an anonymous individual or group called Satoshi Nakamoto, operates on blockchain technology. This innovative technology guarantees transparency, security, and immutability of transactions. Over time, Bitcoin has garnered substantial attention and appeal, captivating investors and individuals searching for alternatives to conventional financial systems. Its decentralized nature, absence of central authority control, and limited supply of 21 million coins contribute to its allure. As a result, Bitcoin has become a prominent player in the digital currency space, challenging traditional financial norms and opening up new possibilities for decentralized transactions and store of value. The historical significance of gold. Gold holds a significant position as a precious metal with a long-standing history. For centuries, it has fulfilled various roles, including being a medium of exchange, a unit of account, and a reliable store of value. Throughout time, gold has demonstrated its resilience as a safe haven asset, particularly in times of economic turbulence and instability. Its ability to retain value over the long term and its reputation as a hedge against inflation have contributed to its enduring appeal and status as a sought-after asset for investors and individuals seeking stability in uncertain financial climates. Bitcoin as a store of value. Bitcoin possesses several appealing traits that align it with gold as a desirable store of value. Similar to gold, Bitcoin exhibits scarcity, as it is designed to have a maximum supply of 21 million coins. The blockchain technology supporting Bitcoin enforces this scarcity by gradually reducing the creation of new Bitcoins. Furthermore, Bitcoin operates in a decentralized manner, free from the control and influence of any central authority or government. This decentralization contributes to Bitcoin's appeal as a secure and independent digital asset, capable of providing individuals with a store of value outside the traditional financial system. Advantages of Bitcoin over gold. While gold has established historical significance and widespread acceptance as a store of value, Bitcoin presents several advantages that position it as a potential replacement. One key advantage is Bitcoin's high portability, allowing for seamless cross-border transfers without the need for physical transportation. Unlike gold, which requires secure storage and transportation logistics, Bitcoin can be easily and securely transferred digitally, making it more accessible and convenient for global transactions. Another advantage is the speed and efficiency of Bitcoin transactions. Traditional international transfers involving gold can be time-consuming and costly due to the involvement of intermediaries and complex processes. In contrast, Bitcoin transactions can be completed within minutes, enabling faster and more efficient global payments. Additionally, Bitcoin's divisibility offers a notable advantage over gold. While gold is typically bought and sold in larger quantities, Bitcoin can be divided into smaller units, making it more affordable and accessible to a wider range of investors. This divisibility enhances its usability as a medium of exchange and store of value. Bitcoin's market performance. Since its inception, Bitcoin has been characterized by significant price volatility. However, amidst the volatility, Bitcoin has also exhibited remarkable growth. Over the years, its price has experienced substantial increases, capturing the attention of both institutional and retail investors. This surge in interest has contributed to the growing adoption of Bitcoin by companies and financial institutions, further solidifying its credibility and market value. The increasing recognition of Bitcoin as a legitimate asset class has prompted institutional investors to allocate funds into the cryptocurrency. Major companies have also started integrating Bitcoin into their operations, accepting it as a form of payment or even holding it as a reserve asset. Such endorsements from influential players in the corporate and financial sectors have fostered greater confidence in Bitcoin and propelled its market value to new heights. Although volatility remains a characteristic of Bitcoin, its growth trajectory and expanding institutional support have established it as a significant player in the global financial landscape, attracting widespread attention and reshaping the perception of cryptocurrencies as a viable investment option. The impact on traditional financial systems. The ascent of Bitcoin and its prospective displacement of gold has sparked apprehension among traditional financial institutions. The decentralized nature of Bitcoin poses a challenge to the control and authority exerted by central banks and governments over monetary policies. Furthermore, the growing adoption of cryptocurrencies has the potential to disrupt conventional banking practices, possibly rendering certain services redundant. However, a shift can be observed as several financial institutions are beginning to embrace cryptocurrencies and blockchain technology. Some institutions have taken the bold step of including Bitcoin in their investment portfolios, acknowledging its potential as a distinct asset class. This recognition demonstrates the evolving perspective of these institutions towards cryptocurrencies, as they explore the opportunities presented by this emerging digital economy. While concerns persist, the adoption and acceptance of cryptocurrencies by financial institutions signal a growing acknowledgement of their viability and potential. It also signifies the recognition of the benefits that decentralized digital currencies can offer, such as increased efficiency, transparency, and accessibility. This shifting attitude within the traditional financial sector indicates the growing integration of cryptocurrencies into mainstream financial systems. The future of Bitcoin and gold. While Bitcoin experiences increasing popularity, it is improbable that it will entirely replace gold in the foreseeable future. Gold's enduring history and cultural significance make it deeply ingrained in global financial systems. However, the emergence of Bitcoin has triggered a transformation in people's perception and utilization of stores of value. As technology advances and awareness surrounding cryptocurrencies expands, Bitcoin and other digital assets have the potential to garner broader acceptance. Bitcoin's emergence as a potential replacement for gold signifies a significant shift in the financial landscape. With its decentralized nature, limited supply, and advantages over traditional systems, Bitcoin offers a compelling alternative for individuals seeking a store of value in the digital age. While the future relationship between Bitcoin and gold remains uncertain, their coexistence is likely to shape the global financial system for years to come. So, if you're interested in learning more amazing information, make sure to subscribe to our YouTube channel and hit the bell icon to get notified by our new videos. Please like and share the video. Don't forget to comment down your views on this. Thanks for watching till the end.